Hey, folks, welcome to Money Me, a really laid back video today. Haven't done videos in a while. Every time I think I'm going to keep making weekly videos, I just get sidetracked with my other YouTube channel and my business of selling online and stuff like that. So, a lot going on. I'm actually out here cleaning up in the garage and got the mail, and the Valley Line 600 just came in. So, I said, you know what? Let's turn the camera on. And the market today, they lowered interest rates by 50 points, 0.5%. So I think they're nervous about the economy, and obviously with the election coming up, there's a lot going on there. But I've been following the market and doing. Chewy's been a winner for me. Chewy's been a winner. Largest position right now is PayPal. That's been doing good, and even today, with the market was up. I think the market was up 523 at one time. I don't know. I try not to. I feel like if you watch it all the time, meaning like every 10 minutes, every 15 minutes, it becomes more of gambling than it is investing or even trading. I haven't done no option trading for months. That account, I had a couple options in a small account, but just they must be overpriced because the timing. The options you got to watch so closely because the sometimes the spread on those just in a day can just be huge. And I did get into Cracker Barrel last week. I sold Chewy actually too early, and it ran in two accounts. I sold some at around 28 and some at 30. I think I saw it in the past couple days it was at 32, but that's all right. A lot of those we bought at 24, 23. So that was a good, I always shoot honestly for 30% returns. And I don't want to get myself in a position that, um, will I get back in them? Yes, of course. But I try to go for 30% a year return overall. So sometimes if I could find a stock that gives me 10% quickly, in let's say 2 months, I'll I'll move on and stuff like that. And so right now there's actually cash sitting in the account because frankly I'm nervous about what's going to happen with the election. On the one side they're talking about possibly raising capital gains, taxing unrealized gains, and so the whole political landscape is a mess when it comes to investing. But if you're doing a mutual fund and you're doing your 401k, you just stay the course. The two accounts that I talk about that I manage for my sons, I'm actively, but at times, like, we bought PayPal, for example, at 61. It dropped down to 58. We bought more. And then we'll sit and wait. But we did sell some. We did sell some PayPal that we bought at 58. That when it went to 73, 74, we sold some, and not a lot, just to kind of diversify. We sold some and put some more into Disney. But yeah, we, you know, try to be, even though PayPal is the largest percentage in those two accounts, because I think the opportunity exists that, um, hasn't happened the way it should be, and I think it's undervalued, and they're doing a lot of new things on growth. But what I do on my channel here, and I don't get paid to do these videos on Money Me. You have to have so many subscribers, and and there's a lot of bigger people that are doing $1 million, $2 million accounts. One of the people I follow is Jeremy, financial education. Do I watch every video? No, I don't have time, and but I like what's happening with YouTube and the opportunity to things that didn't exist like 25 years ago. You relied on Value Line. I remember the Value Line was that thick Bible. I used to get that, and it was $500-600 a year, and it still hasn't really gone up because a lot of people don't reprint. But I subscribe to the Value Line 600, looking for ideas, and a lot of times I'll do a Value Line stock of the week. So this is the Value Line 600 issue one. See, October 2024. You can see there. So I look and see what they have to say. I've done videos. We got out of Walgreens. We did take a small loss. There's one account right now. I think we've only had out of 17 trades, only one, and it was a small loss. Now the other account, it's not been as well, but it's still it's doing okay. That it's we're not losing money, but man, the mountain of it, and I am trying to avoid uh, 25-30% drops, and you know, um, but yeah, we got out of Walgreens. I made a video, and it was a value line stock, and I can't believe really what has happened to Walgreens the last couple of years. But I have a little insight on Walgreens because I buy and sell liquidation pallets and stuff like that, and I've bought a lot of stuff from them, and they've had to write off so much inventory, and they're closing more stores. So it hasn't been good for Walmart, excuse me, Walgreens. So and it's featured actually in this 214, this updated. But all those, even Dollar General stock was down. I saw Dollar Tree. Dollar General, I did a mention on it that you could have bought that stock, and I thought it was a great short actually. And it went up some, and ooh man, it was down 30% recently. Had you been on the options on that one, you would have made a killing. Just looking at AT&T, we were in AT&T never seems to move. Actually, AT&T back in 2023 was down to around 14. The average has been honestly 18-20 bucks the last 2 years. It's not a growth stock, and that's the thing. If you're trying, you can't afford to sit on stocks anymore and let just things just sit there for 2 years, because you're just missing out on too much opportunity. If I'm, let's say for example, at $10,000, if I'm going for 30% a year, that's the potential of turning that 10,000 into, even at just 30%. That's the potential of $6,000, and that's not really, because 10,000 into 13,000. It would be closer to 17,000 if you're getting 30% on top of the 13%. So, 30% definitely is. Now, these two accounts I'm talking about, we don't short stocks at all, and I like the short stocks. I've shorted stocks before because there is opportunity. McDonald's was a good short just recently, but let me see what ones they have that kind of stand out for me. Lockheed Martin has 2 stars. I don't really see nothing that's kind of, grabbing my attention. Cintas is in there, and it's just a nice guide to look up to see if there's any opportunities that do exist. So basically, what happens is you get this, and they update this. I don't know how many I think every couple weeks I get, so this gets updated. Oh, is it once or twice a month I get one of these? But that section, and they have little stories in the background where they talk about, like, any news that has come out recently on stocks that are in there. Supplementary reports, they call it. Intel I saw was down to $18 not too long ago, and I think it was back up to 22 because they just signed a $5 billion. But Intel, we love the name Intel, but that's the thing. So just like Ford, you can't fall in love. It's I always, when I was growing up younger, Peter Lynch used to talk about buy the names. It doesn't work anymore as far as that, because some of these old companies are just don't have the growth that they do. They could be solid blue chips, and they're core stocks, but really to make the money, people are into the. I'm sorry about that. I have another phone, but I haven't muted, and seeing what text messages. But you got to really. I mean, I missed out on Nvidia and Tesla the last couple of years by. You, in your mind, you're like, that can't go any higher. That can't go any higher. But and then you get this supplement that it ranks the industries in alphabetical order, and then it gives them a rating. like right now, retail wholesale food is ranked number one. So that means that I guess in the next 12 months they have that at the highest. One of the lowest, like apparel, is number 63. Biotechnology is 84. That's surprising, but I don't know what's under that. Like Eli Lilly is doing really well. Mm, but it could be companies that are wireless networking is number 82. But basically, what it does is it has all the 600 stocks in here in alphabetical order with their ranks up and down. Amazon only has a timeline of 3 in the next. Aflac has actually moved up. Uh, safety wise, technical. eBay has a 1. That's surprising. eBay doesn't have much growth. That's the problem with eBay. I've been in eBay before, but it just doesn't have. What's nice is it breaks it down because high yielding stocks and timely stocks. So it's a nice little supplemental report. I'm always trying to. I wish I could spend more time reading and focusing on. But life is what it is, and right now I focus on about 12, 15 stocks. That's enough to focus on. You can make your 30% a year if you just stay focused on those 12 or 13%. So, all right, I don't want to keep the video too long because people only have the tendency to watch 6 or 7 minutes in the first place. So I do appreciate the support. I try to put out more videos. A lot of times there's no incentive if you're not getting paid. I know, and there's a lot so people to give up their time. I get it. But anyone that is watching and does support me, I do appreciate it, and I will see you again.